Hello everyone, this is Alpha Dad with 100 Lot Trader. Today I'm just going to provide a quick position update on QQQ, NVDA. I'm going to do my market read and make some prognostications about the future. Let's get to it. So, as a reminder, I've been long QQQ for some time now. I've been holding it in a collar and have traded puts in and around this set of moves that we've been experiencing for the last several weeks. Today I closed my short call. It was, I believe, 535 strike out in February. I made about a 2% portfolio profit on that, which was just fine. I added it maybe back on the 26th and have been holding it for about 2 weeks, and it decayed about 75% in value, which is more than enough for me. Now my QQQ position is in the enviable state of having uncapped, unlimited upside or convexity with a maximum total possible loss of $36, and that's on hundreds of shares of QQQ. So that position is effectively in a holding pattern now. I'm not going to do anything else with it because even if the market does correct aggressively, even if it were to tank tomorrow, my maximum loss is $36, whereas my upside is unlimited. And that's the position I like to trade from. I didn't cover those calls because I thought the bottom was in. I covered those calls because they had decayed a lot in a very short amount of time, and the bottom could be in. I have traded long enough to know that, in particular, when you have been shot calling very well and accurately, there is a risk of you becoming overconfident in your own abilities and sometimes maybe trying to get greedy and hold out for more, or even worse, dropping your discipline and taking on too big a position or something, or adding on and putting in danger all the hard work that you have done so far to build a risk managed profitable position. I'm also generally net delta negative. I have plenty of positions that will benefit from significant downside movements. And while I was largely delta positive on the QQQ position, if we were to suddenly, if this were to be a large institutional buying spree that just came in and went through all of this buy side liquidity that is not terribly obvious, to be honest with you, I would have a limited profit potential, and my ideal is to have riskless or very low risk open convexity, so unlimited profit potential. So anyway, my current position is effectively a straddle or a strangle. I will benefit either way depending on which direction the market decides to go. So that was one of the reasons I also covered that call. So anyway, in terms of where I think we will be going, I'm still giving edge to the downside because of this. So I had been highlighting the sell side liquidity, this wick here, for the last few weeks, and we did run through that. So there was a stop run here today, and that is when I decided to cover my calls because I understand how counterparty works. Looking at the contract history of those calls, it was clearly a sell side liquidity run, so I went ahead and covered, and we are, of course, seeing short covering moving up the market right now. As it stands currently, this can be interpreted so far as nothing other than short covering, i.e., people who went short up at the top of the range are buying back their short calls, or they're selling their puts to lock in profits and readjust their portfolios. Right now, this is NASDAQ micro futures. We expect resistance in this area. This is what, the 1 hour chart. So this is a bearish order block, and then this is trapped buyers of some stripe. So the market will have to work its way through a lot of resistance to get up into a range where a market structure shift could be possible. And there's still, I mean, this has been mitigated to some extent, but presumably there are still trapped buyers up here as well who would need to be bought out from their position. So because there are likely trapped buyers throughout this whole area, and I see that these relative equal lows were re-engineered on this move down, I'm still giving edge to the downside on NASDAQ futures. This is still a descending channel. The trend is still moving downwards. And while we've got a lower low, lower high, and right now it would take, on a daily chart, we would need at least another session to know if this was in fact a full swing low. It is entirely possible that this is just a minor retracement, and then tomorrow what we see is a continuation of the downwards move. It takes 4 candles to determine if you've had a swing. So right now I made a tactical move to take profit, on the sell side liquidity run, and open myself up to the potential of unlimited profits on this side, while still holding positions that will benefit from downside. So I'll hop through a few things I'm looking at. So right now, my belief on what the primary mechanism of a larger downwards move on the stock market would be a spike in 10-year treasury yields. Right now, I mean, it's doing more or less what I had anticipated. It's hanging out in this very tight range, but right now it is in a triangle, so it's indeterminate. If I look at long-term treasuries themselves, which would be the inverse of the yields, it's kind of drifting up, but it's also mostly just a triangle. This is an indeterminate price structure. It's unclear what may unfold here. You can see that there's a large head and shoulders pattern, but this has been evident on long-term treasuries for weeks now at this point. Let's talk about Tesla, because that is the move that I have most accurately prognosticated. On December 24th, when Tesla was here, I said it was fake. It was likely a market maker liquidity run to fill this bearish order block, a seller that had entered into the market. And I also noted an unusual call volume of 33,380 in the money calls bought at the same time on the 227 strike. I interpreted that as probably a large sophisticated trader going short and then hedging their position with in the money calls, which I've noted is what is known as a synthetic put, short equity, long put. So we've run all the way through the 390, 391 area that I targeted. And I do find it interesting that 380 is the area where Tesla's price seems to be getting stuck for the moment. I don't have any specific feelings about Tesla at the moment. This is very much a wait and see. I don't generally trade Tesla, but given that it is, QQQ is the majority of my portfolio and Tesla is about 4% of that, I do pay close attention because it can give me clues as to the overall direction of the market. Right now, I have no reason to believe that this is anything other than just short covering, so buying back short calls and selling long puts. I do see the potential for more downside on Tesla. Let me see if I can find it. Yeah. So on the 1 week chart, you see a bullish order block here. And this would be an area I would expect to see large institutional money coming in, because this was a region in the market where large institutional money came in and was able to lift Tesla up quite a bit. This whole range here indicates, coordinated long-term institutional buying. So 360 would be the level I would be interested in. I am keeping an eye on right now. I would need to see quite a lot of price action in this area, the formation of, higher lows, higher highs, stuff like that, perhaps a nice accumulation signature, before I could say anything with reasonable confidence. I've been looking at the Tesla options market, and I'm not seeing anything particularly clear. Right now, it could go either way. I mean, implied volatility is probably pretty high. I haven't actually checked it. So volatility selling may have some edge. I don't do it personally. I would much prefer to buy out of the money puts up here, because I'm capable of identifying those types of things, and then go long the equity down here if I was going to trade Tesla. But generally, I find Tesla is overpriced. I think it is well known that Tesla is a favorite of the retail trader, and so everything is just very expensive. Calls are very expensive, puts are very expensive, and since I am a net long gamma trader, I tend to not sell puts. I prefer covered calls. Tesla isn't the first instrument I would go to, but it is one I monitor. So I'll talk about NVIDIA because this is where the majority of my current risk stands, and I'll admit that it is taking a lot of resolve to maintain my position here. What I am hoping to do is effectively a turtle soup entry. That's an ICT principle, but entering on the engineered sell side liquidity run, and I do see engineered sell side liquidity right here, these relative equal lows. They're also visible on the daily chart right there, and then you have this nice wick in this former high. Yeah, there's a lot of reasons why this region is very compelling to me as an entry. One of which is the fact that I actually did buy up here when everyone was saying that NVIDIA was flashing a head and shoulders and was about to break down, and I went in and bought, and then it went up 10% or something from there, and then it's just been trading sideways ever since. To be totally honest, I'm not 100% sure what to make of this. I mean, this looks like a nice accumulation structure. This is what I would typically consider kind of a bullish indication. A lot of people might describe it maybe as a bull flag. I personally don't pay much attention to structures because, especially on instruments that have a lot of focus or a lot of eyes on, you can be sure that there are algorithms that are capable of drawing these things for you so that everybody can see them. Anyhow, so what gives me pause about this is, one, this is, despite what this looks like, this is a descending channel. The dominant shorter term movement has been down. And what I'm seeing is it's hanging out an awful lot in the higher end of the price range over the last 20 days. And every time it gets to equilibrium, and I know that's difficult to see because I have an alert there, but it is this yellow line that is just a custom indicator I built. This tells me the mid price of NVIDIA over the last 20 days. Every time it is even remotely tapped this equilibrium line, we've seen an aggressive movement back upwards. And every time I've looked at the options market, I've discovered that there's exactly what I would expect to see, is a whole bunch of short-dated, dark-printed bullish risk reversals being traded. So selling puts to buy calls, that is lifting the market. So there is no doubt that short-term volatility selling and market manipulation are part of what's going on here. Now, whether or not that means, just because it's manipulation doesn't mean it can't lift the market. If enough buyers are compelled into this space. But for the moment, I'm interpreting this as delivery or an efficiency or an inefficiency resolution of this. On a 5-minute chart, it's an order block. You see price keeps rejecting aggressively from this area. There's an inefficiency here, rejects, and then comes back up. What I'm interpreting this is as short-term volatility being used to push or lift price so that a longer term volatility position, so long puts or short equity, something like that, can be filled in this area. Now, I do run the hazard of wanting that to be the case because I have been long puts up here and I want to use them to help me buy a lot of NVIDIA. So this is one of those cases where I am struggling to be sure that what I want and what I see are not in conflict with one another. But so far, I haven't seen anything in the overall structure of this market change. This whole space, which is not trending, this is very much sideways movement. If I were to put VWAP on here, you'd see that it's just going up and down above VWAP. This is pretty indeterminate. And the fact that it keeps rejecting at equilibrium, it makes me very suspicious. It makes me, my tinfoil hat side tells me that this is a bull trap, that this artificial lift that I definitely see in the form of short-term options trading is being used to bring in the retail trader and perhaps take your stops that were down here and bring them up into this area to help power this run down. That remains to be seen. I'll admit that the time I have left on this trade is not with me. I took a shorter dated contract on this because I believed that this move was coming and the risk reward was just too good. This is another reason that I covered the short call on QQQ, because it is entirely possible that I'm just wrong. I mean, this happens. I may be, what helps drive this move upwards, but as of yet, I haven't seen anything that conclusively tells me that is happening. And I still see other signals in the market that suggest that this still may be fake. Or a bearish delivery signal. And I'll go to the VIX to kind of make this case. So I am also long VIX calls. I've been long VIX calls here for quite a bit. So this is what one might describe as a cup and handle. It's a pretty odd one. I mean, but there's a nice curvature here, a very large handle. And then, despite the fact that we've been seeing a lot of downwards movement and volatility, downwards movement in the market, we're not seeing much of an interest in trying to crush or sell volatility just yet. This is an ascending structure. And I had noted these relative equal highs the other day, and in fact, we cleared that out earlier today and have left room for more. So the volatility explosion or expansion possibility still remains. I mean, if you look at this chart, a bid on the VIX is still pretty inexpensive relative to recent prices. I mean, this is still down around the 25th percentile, which puts it, relatively speaking, somewhat cheap. Now, whether or not this unfolds, I don't know. Something would have to trigger this, and that's what I'm kind of struggling to understand what the mechanism for this may be. It's entirely possible, actually, that there is no mechanism. It's just capitulation. Like some big player starts panic selling. Some stops get hit, run through the market, and then we find, the kind of the human reaction side come in, and you start seeing broader panic selling go with it, and then that might put us into a negative gamma scenario, which would cause a market maker to sell with it. So there are mechanisms for a strong move to be in play, but I'm currently not seeing what would cause it just yet. So anyway, that is the update for now. I hope you're doing well out there, and if you're not, I hope you're at least managing your risk. And good luck. I'll talk to you soon.